First off, a Federal Reserve rate cut in March seems unlikely. According to Fed Chair Jerome Powell, the Fed probably won't be comfortable enough with the path of inflation by the time March rolls around to cut rates. However, there might be potential for rate cuts later in the year. Recently, the Fed decided to keep rates unchanged at a stable 5 to 5.5%. Powell hinted that rate cuts could begin at some point this year, but only once there is greater confidence that inflation is moving towards the 2% target. Now, there's been a bit of chatter about quantitative easing and reducing quantitative tightening. What does this mean? Well, it could potentially provide more liquidity before actual rate cuts take place. This suggests that we might see some monetary policy loosening through quantitative easing before the Fed decides to cut rates. So what does the outlook for markets look like? Nomi Prins suggests that while equity markets may experience volatility surrounding Fed meetings, they're expected to end the year on a high note, especially in the tech and commodity sectors. As for gold, due to factors like potential rate cuts, quantitative easing, central bank buying, and a shift away from dollar dependency, it could hit an impressive $2,400 an ounce this year. If you're a gold investor, it might be wise to keep accumulating. But it's not all smooth sailing. There's a potential for a banking crisis on the horizon. However, Prins expects that quantitative easing policies would likely alleviate any market impacts. In the realm of geopolitics, conflicts in the Middle East could cause inflation to flare up if oil supply becomes disrupted. Tensions between the US and Iran could lead to a spike in oil and gold prices. Lastly, when it comes to central bank digital currencies or CBDCs, there are some concerns about privacy and freedom. Steps have already been taken like FedNow that could pave the way for CBDCs. While there is legislation in Congress aiming to prevent CBDCs, they still loom as a potential long-term threat. In summary, the economic landscape is a complex one, shaped by the Federal Reserve's policies, geopolitical tensions, and the advent of new financial technologies. Nomi Prins's analysis provides a useful framework to understand these dynamics and their potential impacts on your investments. Stay informed, stay prepared, and remember, knowledge is power.